Okay, welcome everybody. This evening's ACY Securities webinar. Tonight's webinar is a review of the recent Forex trading patterns from previous month's trading. So we'll go through some pairs from last month. What can we learn? What patterns could we have seen and traded? It was rather range bound for a lot of the month. So that's coming up. Tomorrow, more live market analysis. That's tomorrow at 7 p.m. if you want to join me. Before we get into it, if you can all read through the disclaimer, that would be great. Any questions to the webinar chat box or the question and answer box. All right, so please everybody read through the disclaimer. And tonight's webinar, the purpose of it is really, can you make we're going to look back at the market in hindsight. Can you make hindsight trading your foresight moving forward? Can you pick up some tips tonight that you could start to see in real time to trade, okay? All right, now, if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor at ACY Securities, and I am a full-time Forex trader. I've been trading the Forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with me at our website. Go to acy.com market news tab, or our YouTube channel, ACY Securities Australia, or you can connect with me on Twitter and LinkedIn there. And we have our Telegram channel. If you want to get access to that, just contact Nathan Bray. I'll put his details in the chat in a moment. As well, if you want to get access to my chart layouts and templates, then just contact Nathan. He will set you up with anything you might want to get set up with. So I'll just put his details in the chat. So if you've got any questions about anything, just contact Nathan. He'll be able to help you out. There you go, that's in the chat. All right, so tonight isn't really talking about what the market's doing today. We're looking at the market over last month. So I'm going to go to my charts. And I've already pre-configured a few things. Just in terms of, this is the day charts. I'm going to go through, I don't know, it depends how time goes and how questions come in. So any questions, just type up. I'm just going to go through some examples until I run out of time. All right, so first of all, I want to talk about the Aussie yen, which is rather range bound last month. This dotted line on the charts is just telling you where the month started last month. All right. Now we're rather range bound. I think it's important just to put in some key levels of resistance and some support that will start to, I go to the weekly chart. Weekly support was here, 93.031. All right, there was a level of weekly resistance over here, 95.737. And we've been trading between those two areas, really. All right. Today chart. So this was the start of the month. So we actually, leading into the start of the month, we had this range. I'm just going to draw it in my other drawing tool, and then I can easily delete it real quick. We had this range here. We moved down, we rallied back up, and then we moved down. All right, so the rally back up is something I want to discuss. Is you could have had a fib drawn across this range, and certainly be monitoring that 79% level as price action started to maybe fail to move back down. So ultimately, at the end of the previous month, that first red candle there is the new month. So at the end of the previous month, we were potentially forming a double top up here, or at least holding to a range, with the strong possibility of that failing up there to move back down on this trading day. Now, if you drop to the 4-hour chart, this right here is the first of the month. All right. Now, there's actually a little 79% retracement in here. So the day before the end of the month, we came up, hit the resistance level, traded down a little bit, and then we came up for a further retest. Now, a couple of ways you could have traded this retest of structure up here is quite simply on the 4-hour chart, looking for a break of a 4-hour candle just here. That would have been a good entry. Stop just goes above the high. All right. Or there was a little 79% retracement in here. So if I just clear things off, I might just drop down to the 1-hour chart and have a look in that area. Here we are. This is the first here. So we drop down, we come back up. All right. And I can see another way of getting in here at resistance. You could just use a 1-hour failure here too, but you could have been looking at maybe a little fib rally. So a little 79% failure in here. All right. So your entry would have been 79% level, pretty much here. All right. Stop above the high, and then we get a failure. Now, if you wanted to wait to see whether it actually held to fail, you could have simply waited for a break of a 1-hour candle, stop above, and then you can see price falls down quite nicely. All right. So a little 79% retracement in there for a failure at resistance. So weekly resistance. So it's really just a failure at resistance that happens at the start of the month, and then dropping down a little 79% retracement. All right, back to the day chart. So that was at the start of the month. Now, most of the month it's been range bound, and we came down to support, weekly support here. So I just want to drop down the 4-hour chart. So the weekly support level that we dropped down to was at 93.03 down here. All right, now I'm just checking my notes. So what actually happens in here, we create a range, okay? We hold here, we come up, we come back down to the same level. So I would look at this as a potential range here. All right, there's the, I'm trying to copy that line. Okay, here we go. So a little range here. Now it stays a little bit range bound here, comes up then fails. So there was an opportunity here to trade like it's a range, to trade down from there, but down to support. So just to take you through trading the range, I like to draw a fib across the range. And I'm using these 2 points for my range. All right, so you could have traded down here at the bottom of the range, just here. So you trade at the bottom of the range for a buy, and your stop goes at. So I'm just gonna highlight how you could trade this range. Here's the range at the bottom. So your first entry was here, buy at the bottom of the range, and you put your stop at the 127R, targeting the top of the range. All right. Then when we come up to the top of the range, that's where you're taking profits, but you could have the frame of mind that the range is going to hold. All right. So you could be selling here, stop at the 127 or above, trading back down to the bottom. Now, the fact that this is held at the bottom twice, there's a high chance this could hold once more here. You got that weekly support level from the higher time frame. There's the next buy. You put your stop at the 127 level underneath, and you target the top of the range once more to get out. Now, you could have, again, traded here to go short. Ultimately, though, it does trade back into the range for a little bit and then heads up north. So if you did trade at the top of the range that time, you may have well had a loss, but that range held from one side to the other. It was 1, 2, 3 profitable trades and potentially 1 failed trade, okay? But that's how, if you start to see a range, that's how you can trade the range. And the thing that was governing this range is weekly support down here. All right. I'm going to focus quite a bit on the Aussie, and whilst it was range bound, and the price action, you might say, doesn't look all that nice. And what I'm trying to show you is, if you can see what price action is doing, there are trades to trade just on this one pair for the whole month, if that's what you want to do. All right, so let's just tidy that up. I'm going to get rid of the top of that range. We'll just leave that line down here for this bottom of the range, because what happens is price comes up to here, trades down, and then ultimately comes back down and visits this weekly support level, this level once more here. Now, it's already proven to you before on the day chart and the 4-hour chart that it's holding here. So maybe it will hold a further time. That's the philosophy you have to take. Right, it's the 4-hour chart. So this time the range is changing in terms of drawing the fib. I will be drawing from that low up to that high there. All right, so I'm just adapting how I teach this. But you're going to see why I'm using this high, because it comes into trading over here later in the month. All right, so we come back down to here. Now this level is going to hold a support. I will be targeting back up the previous high. That's why I'm using that high there. All right, so now your resistance level is up here, top of the range. Get that line straight. Oh, really? All right, that'll do. All right, so down here, you do have the opportunity just to trade at the bottom of the range. Same process. So you're trading the bottom of the range, whether or not you're trading at weekly support or this area here. Let's use that area there. All right, stop goes down and 127 are underneath. All right. Now, if you're concerned that, well, I don't know if this is going to hold or not, I want to wait. Well, if you waited, you can start to see that there's lots of rejection candles happening on this 4-hour chart. Only one of these candles manages, well, none of these candles managed to close below this level on any candle. So there's 1, 2, 3, 4, 5. There's a whole day there of trading where it keeps trying to move below 93.03, holds, and can't close below, the level that we're using for the bottom of the range. So you could be trading that level anytime through those candles. You could be waiting for some form of reversal. There's a reversal here. You could trade the break of that 4-hour candle here. All right. A couple of ways of getting in on that to move up. And you're targeting the top of the range. Top of the range is up here. So if you're trading down here, it meets the top of your range. The range, in actual fact, the range is a little bit wider than I'm showing you. It's not just this high here, because on the 4-hour chart, there's also a high to the left there as well. All right. So we false break that high when we come up to this high area here. And this doesn't want to go straight. There we go. So when we come back up to this area, top of the range, you should have the mindset that maybe we're going to hold at the top of the range to trade back down. All right, so this is getting into the end of the month. Once more, you could simply have traded the top of the range, sell at the top, stop goes at 127 above. Now, of course, if you're not used to just trading at a level when price is rushing up, you might want to wait, or you can do this in a demo account and get comfortable with, okay, I'm just going to test this out. I think I've got a range. I'm going to trade at the top, see if it holds. All right. Now, it actually also offers you a little 79% retracement here. It drops down and then comes up here. All right. So if I draw in a little fib, just there's a little low there. We rally back up to 79% level. That could have been your entry. So we basically hit the top of the range, drop. You'll often get a retest, and then we fall down. So there was an opportunity for a 79% entry here. All right, stop goes above the high. So the little entry in there, stop above the high. In that case, you can limit your risk a little bit more than just trading at the top of the range. All right, so I'm just pausing that question. So Tim, yeah, if you're trading it at the top of the range, you'll be using a sell limit order to sell. And if you want to be buying at the bottom of the range, you're going to be using a buy limit order. So those are pending orders. So they're sitting there. So ahead of price action coming up to this level here, you could have a sell limit order just sitting at that high point. As soon as it trades to the high point, it's going to sell for you. At the same time, you can have preset your stop loss order above. All right. And you can also preset your target at the same time. All right. All right. So rather range bound for the month, the Aussie yen, but just showing you there, if you've got your range hat on and you're drawing out the range properly, there were countless trading opportunities there that you could have traded if you were just purely focusing on one pair through the whole month. All right. A pair doesn't have to be in a massive trend to offer you good, rewards. Trading at the bottom of the range, trading up to the top of the range, putting your stop at the 127R, the distance between bottom to top offers you approximately a risk reward of 1 to 3. All right. So if you get a number of successful range trades off through the month, that's going to offer you a good risk reward return on your account. Okay. All right. Any questions on that before we move along? Just pausing. All right, let's get into the Aussie dollar. The Aussie dollar has obviously been declining last month. This was the start of the month. All right, and I just want to go to the 4th of August, which is just in here. Now, we broke through support. That was at 65.95. And really the trades that I've been seeing on the Aussie dollar are just structure trades. We break support, that support becomes resistance. You're trading at resistance to trade down from. Not a true range, but what you can do is set up a range and use the resistance as though it's the top of a range. I'll show you how you can construct that. So what I'm doing here is going to be adapting how to trade a range, but with a trend. Whereas on the Aussie yen, it was just a range. All right, so dropping down the 4-hour chart in this area here. In fact, let's go back to the daily. Say we come up, we break below support, expect support to be resistance. It holds here, trades down, comes back up, holds here once more, trades down. All right, so this we need to focus on. I'm just going to draw it in quickly before we show you how you could have traded it. Really, the range is here. That's the top of the range. When this low comes in, that's in the short term, the bottom of the range from here to here. When we go to a lower bottom, then that becomes the bottom of the range from here to here. All right. Because I'm just using this area as though it's the top of a range. All right, so let's just get into it. So the first range is here. So I just want to draw a fib So we can see that on the 4-hour chart. All right, so we come down to this point here. And I'm going to trade this area here as though it's the top of the range. But I'm just going to draw my fib like so. All right, now, in actual fact, you could draw a fib so that it actually sits on top of your resistance level. I could go up. I can't go up to there because that's where price moves up to. So what I'm trying to show you here is I'm using the resistance level as the top of the range. So I'm going to draw my fib on the resistance level down to the low that we've just lowered at. And I'm looking for price to retrace back up to this area. Top of the range being the 100% of that retracement, okay? So you're looking for this to hold to trade back down. Now this is going to hold. It shouldn't go through too much. And really it shouldn't get to the 127R. All right, because we're expecting this level to hold. So this is how you construct a nice risk reward. And if you're wrong, you're going to be wrong at the 127R level, okay? So as price is coming up, you're looking to sell here. You put your stop here ahead of time. Price comes up, hits you in, trades through a little bit, and then comes down. Now, as price is coming down, you may be expecting this to continue down. So I'll be getting my trade at break even with the hope that this would move down for a long-term move. Now, it actually comes back up for a retest. So if you've done nothing to manage the trade, you probably end up with a break-even trade. And that can happen. So we actually come up for another retest. So you may have made some profit down here or not, depending on how you manage the trade. But then I want to show you again how you can trade it like it's a range from the next low that comes in. So the next low that comes in is down here. So keep the fib drawn at the top of your resistance level. All right. So we're going to trade at the resistance once more. But now the range is slightly larger. So the 127R is slightly further up because the range is bigger. All right. So again, your entry is at the top of the resistance level. Stops at the 127R. Now you almost get taken out, but not quite. That's why constructing your range like this using your resistance level as the top of the range, these are all Fibonacci levels. They're all mathematically calculated according to Fibonacci. So as long as the market doesn't want to break into any form of trend where it can break strongly through resistance, potentially it can't meet then the 127R. It can only meet the 127R and move above it if it's kicking into a trend above that resistance level. So we're using a few things to say, okay, I can construct a good risk reward trade with limited risk for the potential of a large gain on the basis that price isn't going to kick into a trend above that resistance level. And I'm using this range to create these levels. So you're selling here, stop goes at 127R, and you can be targeting, you know, maybe the next level of support further down. Next level of support on the day chart at that point. Just have to get rid of these lines so I can take control. You know, if you're looking to sell up here, the next major level of support is here, 64.58. So when you're dealing with major resistance levels, if we're failing there, anticipate we're going to trade down to the next major level of support. So you could have been trading at 65.95. So the trade is based on the, you know, what I do on the 4-hour chart, the day chart, the trade is you're trading here, stops at the 127R, and you could be targeting, you know, if you targeted the 127 extension of the range, it's just slightly ahead of the support level at 64.58. So 127 or support level, either one would work very well. I'd probably go for the support level because once this starts trending down strongly, this acts like a magnet for price action. So that's how you could structure around, you know, structure a trade around the actual market structure. We break below support, it becomes resistance, I'm just showing you an adaptation of creating a range so that you can create a very good risk to reward trade there. All right, the risk to reward on that would be approximately 1 to 5. All right. I take those any time of the month in terms of structuring and risk reward like that. That's how you create great risk reward structure. All right. Understanding what the structure is and trading around it using the Fib tool. All right, let me just check my notes. I think that was everything I wanted to talk about on the Aussie dollar. All right. Next pair up, Euro Yen. Now, I put this out last month. So at the start of the month. So let's just go to the start of the month. We had this failure across here in the previous month. I'm just going to put it in roughly because I'm not actually trading at that level. So I just want to show you that we were failing up here. We dropped down and, we did drop down to a lower bottom. So we may have been thinking that potentially we could have been coming up for a 79% retracement in here for a failure to move down this way. Of course, that never happens, but in this area, as we start to hold up here, a little head and shoulder pattern formed on the 4-hour chart. So let's just take you through that. That's over here. And I put this out on Telegram last month. So whilst some of these trades I'm showing you are looking back historically, some of these are, some trades I did post out. And this is one that I did post out. So we had this. Let's draw it in here. Little head and shoulder pattern form here. And we came up there. That was where the right shoulder comes into that left shoulder there. So really the trade is you draw a fib across that range and you're selling at the 79% level. Stop just goes above the high. So let me draw it in. Selling here. Stop just goes above the high. Targets the 127. And it was really a picture perfect head and shoulder pattern on the 4-hour chart trade down. Now, I actually thought it was going to move maybe down a lot further than it did, but nonetheless, if you just traded it as per the Fib tool, taking profits at the 127R, again, that's the risk to reward on that trade. When you're selling at 79 down to 127 is, from memory, it's like a 1 to 4.2 risk reward. All right. All right. That's the Euro yen. And then there was the possibility of looking at the market up here, the possibility of a range forming up here. So let's just talk about that. All right, so let's just come up here. So the area, the top of the range, is up there, okay, that high there. You could have been maybe using the top of the range there. But I would have tended to go to that area there. All right, now it moves down to this point here, and this point gets support. Just put a line in. It's really getting support from over here. All right, so what we're getting is we've moved above this area here, holding up here, and we're trading down to here. And there's a possibility of looking for then a failure up at the top of the range here to trade back down. All right, now draw a fib across that range. If you're just selling at the top of the range, you're selling here. Stop goes at the 127R. All right. And you're taking profits down here. Now, you could have maybe thought as well down here, this is just to show you how risk reward works in your trading, and not every trade works. I mean, I could just sit here and review the month and say, okay, these are the trades that works. It's great in hindsight because I'm picking them in hindsight. But if I was doing this in real time as well, I could have then been thinking, well, I'm going to be trading here, potentially for this to hold as support, to trade back up this way. All right, now if I did that, that trade down there potentially offers you, I may have told you wrong before, but this actually offers you, you're getting almost a risk to reward of 1 to 4 here, just under 1 to 4. If you trade here, you lose. So you almost make 1 to 4 down here, and then you lose here. If you buy here, then you've got your stop down here at the 127, and you're wrong. All right, so you're going to lose 1 there, but ultimately you're still up 3. Now you may adjust things because price starts to head back up here. Once more, you might decide that this is going to fail once more at the top of the range. All right, so let's just tidy things off. Now what I would need to do is adjust my fib to that low. So if I'm thinking that this is the top of a range up here, I'm using this low now because it's the lowest point within the range that I've got. All right. So this is coming up. If I'm anticipating that this could hold here, I'm once more looking to sell here. All right. Stop goes at the 127R. Now, yes, price trades through here, and you may be thinking I'm wrong, but once more, price almost trades all the way back down to the bottom of the range. Now, if it doesn't meet the bottom of the range, so if you were trading this as a range, you would need to start to manage this because it's starting to move back up this way. So at some point, you know, as a worst scenario, when it breaks into an uptrend here on the 4-hour chart, that's where you need to exit at a worst point. Staying in at the moment, potentially this is moving back up to the top of the range at the moment. So, you may have not captured all your profit within that range, but again, offered a profitable trade down. You may have had a losing trade at the bottom of the range, readjust the range. There's another trade here to trade down. You don't maximize the profit, but you still make some profit there. All right. All right, next pair. We'll get into the euro dollar. Just checking my time. All right, euro dollar. Look at my notes. All right, this is the start of the month. Now I want to talk about the 110.33 level. This is the start of the month. 110.33 is that weekly high over here. And what I want to try and emphasize to you, it's all about what the market structure is and how the market's reacted to it. And structure can last for quite a while in terms of what the market's reacting to. Is here back in April, came up to this, that's a weekly high, just to prove the point. It's this high over here. All right, failed here, impulsive move above, and then we came back below. Once we moved back below, this is the month before. See the last 2 trading days of the month before, we were starting to hold here at that level over there. All right, it bounced there in the previous month, so that was support there on that level, that candle there, to come up. Then we moved below and it became resistance on those 2 candles. Then we moved down and then we came back up. So again, I'm looking at this as resistance and I'm going to treat it like it's the top of a range. So I'm going to go through the same process that I showed you on the Aussie dollar. I'm going to simply use that resistance level as my top for my fib. I'm expecting that that level is going to hold. So I'm just going to draw it down to that low there, because from that low we come up. So if we come up to test that level, I'm expecting that it's going to hold. Broken support becomes resistance, okay? And it's already proved. I just need to draw this. I'm going to have to drop down to the 4-hour chart to get the level. Get it on that number, which is just there. In fact, I'm going to put in the exact number. It's 110.33. Is that number for the fib tool? Just going to drag it to that low there. All right. So back to the day chart, just to show you what we're doing. From that day chart low, we're expecting that the top of the range is here, and we're going to hold. So then your sell is the top of the range. Stops at the 127R. Now stops at 110.65. Okay, I'm just getting the number because it actually offers you another opportunity here to trade at the top of the range. See, we come down, comes back up. Now that candle goes up to 110.64. All right. And well, when you're setting, so you're selling here, right? Trading down. If you're selling here, that 127R is at 110.65. So your actual buy stop, that's the sell price because it's a sell chart. So you should be putting your buy stop at that level plus the spread. So that actually comes up and just misses your stop. All right. Fractionally. Now, depending on what platform you're using, and it also depends on how wide the spread is at the time, you could have got taken out at that level. All right. So there's a question there as to whether you get stopped out at the 127R. So you're selling. It all depends what the volatility was at the time and how wide the spread is. You're selling here, and you could have gotten stopped out there. And sometimes that will happen. You know, sometimes you get to live. And of course, this moves down nicely. Sometimes you just get taken and then it moves down nicely and you just end up grinding your teeth. All right, but what I'm trying to show you here is the technique of using a resistance level as the top of a range. All right, now if you wanted to wait here, and just simply wait for a break of a 4-hour candlestick low to get into the trade, there was an entry here. All right, depending on how you want to trade it. If you're waiting to see if this fails first, looking for a 4-hour reversal, break a candle low, there's an entry there, stop goes above the high. In that scenario, then you don't get stopped out because that high is formed. You could have been getting stopped out on that high, and that can happen. But that's why if you're setting up a great risk-reward structure on your trades, it doesn't matter when you get stopped out. If you're only trading risk rewards of 1-to-1, then it does matter when you get stopped out. All right, so let's just clean those lines off. Just drop it back to the daily. Now, has traded down, traded down very nicely through the course of the month from that level. All right. Now, whether you got lucky or not, depending on how you're trading here, one thing I can see when I'm looking at this time frame, one of the things you could have been assessing if you're trading at this resistance level is a very good level to put your stop would have been just above this area. All right, which would have been fractionally above the 127R, but would have been above the next significant level of resistance. You're trading at that resistance level, you could put your stop above the next level. And then price would have to break this level and hit the next level before you're wrong. All right, so just another way of looking at how you can structure something. All right, now as the market proceeds down from that level, we get a very similar trade setup style like once more, looking to trade the range. Or, how do I construct things so I've got a top of a range, a resistance level? There's another level here where we form another bit of a double top. So that's at 109.29. All right, so it comes down, comes up. The trade I want to focus on is this one here. But you could trade the exact same way as I'm going to trade it here. I'm just going to talk about this area here. So the way I would draw a fib from there to there. I'm looking for that to be the top of the range. Price comes up to the top of the range. So you could be trading the top of the range. Selling here. Stop there. And the focus is this is potentially a double top as well. All right. Trading right at the top of the double top from the day chart perspective. Now, if you wanted to wait to see if this was going to hold, you could see that rejection candle there. You could trade the break of that candlestick to confirm for you that we are reversing. Then your stop goes above here. All right, and we obviously trade down. Now with the double top, I like to be getting by the 79% level. I mean, you could have traded at the 79% level as we start to dip just below. Stop above the high as well. Various ways of deciding that you want to get in, but I like to get in on a double top by the 79% level. I mean, all this price action could have been happening while I was asleep, and I wake up the next morning and, okay, how do I get in? All right. So price, depending on where you are in the world, you can't always get in at the perfect level because you haven't decided what's going on. And then when you wake up, you go, okay, what's happening? All right. So different ways of getting in and structuring a trade. All right. Today chart now. So potentially here's a double top. Now the target is down at the 200 level. So, just looking at how we could trade the top. Stop goes at the 127R. Your target is down here, which we haven't got to yet. So we'd need to break this major support level. So that would be a better target, but potentially we could go down to 200 level. All right. Of course, if you're trading at the 79% level, as it starts to trade down, your stop's just going above there. And, we're targeting down at the bottom. So this is still running out. All right, so that was a very nice top of the range. This one may have stopped you out, but this one is offering a nice profit. All right, and I never want to give the impression that all trades are going to work. What I'm trying to show you here is that a rinse and repeat method of looking at structure. How can you trade it? Sometimes it's going to work very well for you. Sometimes you might get stopped out and still be right with your analysis, but that's just trading. All right, let's get into the pound dollar. This might be the last pair we look at. And I want to talk about this range here. I've already drawn it in. All right, this is the start of the month. So what happens at the start of the month is we break below this level of support here, down to here. So this is how I'm constructing the range. And it went quite sideways. And I, through the month, was actually more biased to trading to the upside than trading the range and maybe trading to the downside. But as I look at it and what's formed through the course of the month, yes, you could have had the bias to trade to the upside. So you trade at the bottom of the range, you trade up. But there was still the potential then because it wasn't able to break back above this level. This level that we broke below at the start of the month became a critical level of resistance for the whole month. We did try to trade above it a couple of times, but we couldn't get back above it to continue and move up. All right, so get your fib in. I'm just going to use that low point that was the support level. because I want to use that as the top of the range. All right, then we'll drop it into the 4-hour chart. That's that day chart low there. And there's the bottom of the range. And the bottom of the range, that's fine. I just want to make sure where I was getting that line from. It's really that low. That low there is at 126. All right, there we go. Now we come up, and this is where we hit the top of the range. All right, so as we're coming up here, at this point, you should already have your orders sitting at the top of the range, just here. Doesn't actually get hit till there. So there's always a dilemma when price isn't quite getting there. Is it ever going to get there? But ultimately, it does. So your stop goes at the 127R. That's the first trade. Trades down to support. This is where you're taking your trade off. All right, that's support. All right. Now at this point, you might not think there's a range to trade up from because you're looking at this for the focal point of trading down. This holds and trades up. The fact that this is held and we're coming back up to here, this is your next trade. Look to trade down, okay, from the top of the range. Stop goes in the same position once more. Targeting once more. So that was your target. This is your target once more. And then you're out of the trade. The fact that we've got two lows sitting here now means that you could be thinking that this is going to be the bottom of a range to trade back up. So here, there's a buy opportunity. Stop goes at the 127 level below here. All right. Now price goes up. Once you pass the middle of the range, you want to get the risk out of the trade because that's where price can fail within a range. So but at this point, this area here, we should be getting out. Well, not getting out of the trade. We're getting the risk out of the trade. All right. And moving your stop up to your entry. Now we fell in the middle of the range and then break below the bottom of the range. All right. To a lower point. So with that in mind, that's starting to tell you now, we've been doing this. We've traded up, traded down, traded up. This is our next trade to trade up. But then it only gets to here and then boom. That's changed the structure of that range now to much more of a downtrend. So that whole leg now has become like so. So now you should be looking not as a range trade, but more of a trend trade to the downside. And I've actually put this out on Telegram in the month for a 79% entry here. So let's have a look at that. So that's how you could have been trading the range until the range ultimately failed. All right. So the next trade was watching the 79% level. Came up perfectly here. That was your trade. All right. There's your entry. There's your stop. And we haven't met the 127. This is really a target if we're trading within the fib tool. Trading down. Corrective rally. Trading down. Now, if you wanted to look at it on the 4-hour chart, how could you get in on the 4-hour chart? Let's just drop down to that time frame. This is where we come up. So there's your rejection candle. I showed this entry before on a rejection candle. So there's a fire rejection candle, and we start to trade up with inside that rejection candle. But ultimately, if you want to trade the break of the rejection candle, your entry's here. Stop goes just above there. And you're using the same target as you were on the day chart. All right. All right, so that's, how you could have been trading some of those pairs. A lot of how I'm showing you tonight is just adapting the range trade a little bit, showing you how you can construct very good risk to reward within the range, okay? And slide view saying, do I have time to run through silver? So I'll just spend the last couple of minutes of the webinar looking at that for you. So a quick analysis on silver. And silver to the US dollar. All right, the monthly chart is up here, but it is trading within this range here. And I guess, I don't know what you're looking at, but looking at this myself, are we playing at this 79% of that range there to trade down? You can see how the weekly chart's been using that 79% level to hold. I mean, it's a bit mixed in here on the weekly at the moment. Higher top, higher bottom, potentially a lower top forming here. And, it is quite range bound. So I would say, until proven different, when I'm looking at the day chart here, just back to the weekly chart a moment. All right, so we've been drawing that range in. We're in the middle of the range. And it is, holding to some of these trading levels. You see these highs here became support here, resistance there, tried to move above and then back below. I mean, potentially this is trading down to here with a question mark. Then what does it do down here? But I mean, the trade was up here. Looking at that range there, the trade down was the failure here through that area there. Right now, I don't see a trade because we're in the middle of the range. You could, if we are moving down to the bottom of that range at the moment, you could draw a fib from, like so, looking for some form of rally back up to here. Assuming that's the low of the fib. That sort of affair. Are you already in it? Are you already short, long? What you're doing, Slav? You're already short? All right, so you got short at the top. So at the moment, it's in the most dangerous portion of the range. It's in the middle, where it can decide it doesn't want to move down to the bottom. But yeah, that's potentially what you're looking at, isn't it? back to the bottom, and the bottom might break. Steve, you're asking me, do you need to trade for the lower time frames when trading a range? Not necessarily. Depends where you see the range. I was showing you, for example, on the pound there, that where the 4-hour range was. Had it drawn in here, but I could see that range on this range here that I was showing on the 4-hour chart. I can quite clearly see it here on the daily chart. It's the same range. I was just using a 4-hour chart to show more time. But I can quite clearly see here that there's a range there. It's the exact same range that I saw on the 4-hour chart. So you're selling here, you're buying there. That's where it went up and failed and then fell through. That range looks exactly the same to me on the day chart or the 4-hour chart. I just dropped down the 4-hour chart so you can have a closer look at what price was doing. So that range is clearly shown as a range, be it on a day chart or a 4-hour chart in my mind. All right. And Azul, you want me to review the DXY, or I will just have a look at the DXY before we finish up. Go to my other charts because they've already got my lines on my other charts. I mean, really, the DXY at the moment is, from a weekly chart perspective, it's in an uptrend here. It's probably coming up to the top of the range through the course of this month. From the monthly chart perspective, it's broken above what has been resistance through last month, this double top area. Okay, coming up. Are we coming up to test the top here at 105.87 is the question. We're breaking above one weekly lower top, next weekly lower top, next area is up here. We had a 1 week down last week. This is 1, 2, 3, 4, 5, 6, 7. This is the 8th week up. All right. So I'm expecting this is maybe coming up to the top of the range. And that day chart's just in an uptrend at the moment. May need a pullback because, we may need a pullback for a further higher bottom to form. But at the moment, it's in an uptrend. All right. Okay, everybody. So hopefully you got some good information there from reviewing last month. Can you add that into your thought process for this month? And if you see the same sorts of price happening again, using that technique of broken support became resistance and using it as a top of a range happened over a number of pairs last month. All right, so it may be happening again this month. Shakur, yeah, it's been recorded. So if you contact Nathan, he'll be able to give you access, okay? All right, everybody, thanks very much. Just to let you know, coming up tomorrow evening, I have a webinar at 7 p.m. Just head over to the website. Here we go. Go to the webinar page. I've got a live market analysis tomorrow at 7 p.m. If you've got the time, look forward to seeing you then. Okay, thanks, everybody.